Good morning, this is Larry Edelson with my Uncommon Wisdom video market update for Monday, July 9th. Well, there's been quite a lot of action since I last sent you a video market update. Most of it, of course, the turbulence surrounding Europe and its sovereign debt crisis. There seems to be a new agreement in Europe that has caused some short-term rallies in the market. However, the latest agreement from Europe will probably fail, and fail rather soon, because there's really no way the German citizens are also going to agree with Chancellor Merkel's concession that Germany will share in European sovereign debt liabilities and agree to directly fund banks. There are a lot of vague details about the latest agreement. In short, I don't see it working out, and I do believe the recent downtrends that we've seen in most markets will soon resume. Let's now go to the charts. I want to go to the weekly chart of gold, which I've been following here for you. Pull it over a little bit. You can see that gold made a low down at that 1522, 1530 area, 1545 support level. Then it rallied a bit on the news out of Europe a week and a half ago, and already that rally is starting to fade quite a bit. It is indeed possible that we could, let me zoom in here for you, see gold move up, even test 1700, but the downtrend remains intact, and the bias, according to all of my signals, remains on the downside for gold. And I still believe quite strongly we'll see a test of at least the $1,400 level in the weeks ahead. Silver, weekly chart here, pretty much the same thing. We did break the week before the latest European crisis meeting down below this uptrend line. After the news, silver rallied back up to test that line. It's going to now kiss it goodbye, and silver should fall quite sharply in the weeks ahead. It will remain a volatile rally with some sharp short-term snapback rallies, but the overall trend for silver remains down on a short and intermediate term basis. Now, the dollar did correct a little bit and pull back. It's holding support in this area here, as you can see. Pull it over here for you. The euro, just before I recorded this, has been starting to tank again, so I do expect a new rally in the dollar as the European crisis rolls on. Dow Industrials holding firm. We've seen some pretty decent sell-offs here, but snapback rallies as well. That's a testament to what I've been telling you all along, that long term the Dow Industrials, the S&P 500, remain in a very healthy long-term bull market. However, it's not ready to take off to the upside. I would not be surprised that we still see consolidation and a move down to 11,500, 11,000 in the Dow before we really take off to the upside. So don't go all in on the broad stock markets just yet, and certainly not in Europe. The only market that's really buoyant right now is, surprisingly, the U.S. markets, because it's the recipient of so much cash coming out of European sovereign bonds and European markets that are looking for safe places to invest. Naturally, that money is going largely into the U.S. bond markets right now, from the frying pan to the fire, so to speak. But it is also going to the U.S. stock markets, which is lending that long-term support to the Dow Industrials. That's it. Please stay tuned to all my writings, and I'll talk to you again soon. This is Larry.